Hi, folks. This is Sean Hyman, and I write the Logical Investor newsletter. It's a stock market investing newsletter. So, if you're looking to learn how to invest on your own and want to learn a system and a philosophy that's been tried and true over the years, that is a true investing philosophy. In other words, we're in positions for 2 to 4 years on average. Some will be a little shorter than that, some will be a little longer than that. If you want to learn a true investing philosophy, come follow me at SeanHyman.com. That's SeanHyman, SeanHyman.com. And I'll be loading this up, of course, on our site, but I want to share that because hopefully others on the site will be sharing this video on their social media pages and via email and various sources, and it'll help you to stumble across this and help you in your investing. So I want to talk to you about how emerging markets provide great opportunities for stocks. And at the time, they don't look like opportunities because opportunities are always chaos in disguise. So right here, we've got the dollar against the Brazilian real. And so when this goes up, it means the dollar's going up against the real. And really what it is, since you've got a mature currency against an emerging market currency, the more volatile of those two components will be the Brazilian real. So it's going to be the one that's moving the needle a lot of the time. And so when this zips up in a parabolic move right like that, that's not necessarily because the dollar is getting so strong in general. It's really because the Brazilian real, which is their currency, it's like their dollar, is getting that weak that fast. And so when you see these big parabolic moves, it's because of a crisis or instability within their nation. Sometimes it can be something politically, sometimes it can be something economically, sometimes it can be a combination of the two. But there's always some crisis, and then sometimes there's crisis that spills over into different emerging markets. So there's been the Turkish lira has lost something like 40% or so of its value in a relatively short amount of time. It's in a crisis. The Brazilian real has been recently in a crisis, which you see right here as this zips up. The real is dropping big time against the dollar. So formerly, $1 would equal about 3.2, reals, and now it equals 4.15 reais, is the way a lot of them say it, or the real singular. So as this goes up, a dollar keeps getting stronger against a weaker real, and so a dollar buys you more reals essentially. And these parabolic moves create opportunities in stocks. So for instance, a stock that we owned, and by the way, this RSI and this MACD here are judging based off of the dollar against the real, not what I'm about to show you here. So what I'm showing you here is an electricity company that we've owned in a previous portfolio called CIG, or also known as CMIG. And so they're a Brazilian electricity company. And what you'll notice is how affected they are by this surge. And every time this surges, or the real weakens that much against the dollar, it ends up eventually putting in a bottom in a rally that ensues. And so I'm going to show it to you here, and then I'm going to overlay it. So because this goes down, but it's kind of hard to see from here on the way it's compressed there. But this goes up, this ends up putting in a bottom, and then trending higher for years, and this declines for many years. Then we get another crisis in 08 that surges from 155 to 262 before it ends. And so the real drastically weakens very quickly once again, which initially puts a hurt on their stocks. It causes CIG and others to drop. But then what does it do? It ends up putting in a bottom as this puts in a top, and you have a multi-year rally that goes on up again. And then what happens once again, there's another crisis that comes along. By the way, in emerging markets, it seems like there's a crisis that comes along every so many years. And so you just have to realize that that's part of it. When you are emerging as a country, as an economy, every so many years, there's going to be some major bumps in the road. that have already been ironed out in mature, more developed nations. So it's not that they don't experience dare bumps as well. It's just that they're not quite as drastic because you're dealing with much bigger, larger economies. So the U.S. doesn't feel, that you won't see the U.S. dollar drop 40, 50% in value within months or a year or two, but you can certainly see that in emerging market currencies, and that it definitely does happen. It's happening right now with the Turkish lira. We've got a fairly big one happening right now with the Brazilian real. The South African rand is having the same thing. The Argentina's peso is having it. I mean, so there's a number of emerging market currencies that this is happening with, and it's rattling their stock markets when that happens. And then when these currencies, when the dollar against them peaks, which means their home currency themselves bottoms, and then the home currency turns up, it brings these back down, and that's when there's a bottom in their stock market. Well, so in the past, the dollar against the real has run up into the fours before returning lower. Here it was 401, here it was 425, here it's been 421 so far. And we still don't know in this crisis if we're completely done with it yet, because there is no bell that rings at the top or bottom of a market. You know for sure in hindsight. But what you do know is that when these moves get parabolic, they don't last forever, so they move up quickly, but in time they cover a lot of ground in such a little amount of time that the crisis gets over and it calms back down. Sometimes it goes way down, like from 401 to 155, or over a number of years, and sometimes it's more temporal until the next crisis, from 425 down to around 310 over a year or two. And this one went from 262 to 153, over 3 or 4 years. So this one's headed up, just like these in the past. Some of them are shorter in duration, some of them are a little longer in duration. And again, they're such parabolic, straight up moves that you don't know exactly when they're going to end. But when they get stretched very far away from this 200 week moving average, which is this red line here, there comes a point where they snap back to it, and usually then some. So gets far away, snap back, and then some. Gets far away, and this time it snapped back to it, exactly to it, instead of going then some, which is rare. And then we snap back again. And so, in other words, we pull it away from it, just like a rubber band. Picture a rubber band being tied to the moving average and being pulled and stretched away with the price. Eventually that snaps back. And so what's going to happen when that snaps back towards the moving average, and probably then some, is that it will put another bottom in stocks, and they head higher. So I'm going to take this price, and I'm going to move it and overlay it behind the actual price now. And so the red and black is the dollar against the real, and the just straight black line is CIG. And so you see the peak here corresponds roughly with the period of a bottoming in CIG, and you see the currency exchange rate go back down, which means that the real is strengthening against the dollar, and you see their stocks recover. You see the dollar gains a ton against the real here, and you see a corresponding move in the in their stock market. You see the real bottom here, which is because the dollar versus the real peaks, which means the dollar peaks against it, the real bottoms against it. So I know it's kind of a hard thought process to think about a pairing being on a chart if you don't trade currencies, but so when this comes back down, it means the real is strengthening once again against the dollar. So these upside down V's produce regular V's on the stock charts, and so the real starts strengthening again. And about the time period where the currency bottoms is when the stock market bottoms. And a lot of that's because money flows. So if you're a foreign investor and you're wanting to invest in Brazil, do you want to do it when their currency's going haywire and going nuts and losing 10, 20, 30% in a relatively short amount of time? No. Or do you want to wait and wait for their currency to stabilize and start to strengthen before you go back and invest in Brazil? Yes, that's what you would want to do. And that way you could make money as you're exchanging your dollars for the real, so you can make money on the exchange rate, and you can also make money on whatever the big foreign institution is investing in, whether they're investing in real estate or whether they're investing in the stocks in their stock market or whatever it is. They can make money on that asset, and they can make money on the exchange rate as well. So I know it's a mouthful. It's a lot to think about and consider, but that's what these big international corporations, big pension fund managers, big hedge fund managers, all these guys, they have to think about. So they watch these currency exchange rates because it gives them some clues as to what's happening in those local stock markets. So each time we get in crisis mode in a currency, you want to be looking for opportunity in their stock market. And many times I've done that in the past with some of some of their most pristine foreign stocks. And then in the logical investor portfolio, more lately, I've been doing it with ETFs, exchange traded funds, where we spread the risk over a basket of stocks. Because if you take, CIG and you put in, let's see, I think it's, let me take a look, and I believe I've got that ticker symbol right. Yeah, so here's Brazil's Bovespa, which would be kind of like saying our S&P 500 or Dow Jones Industrial Index. In other words, it's an index that tracks Brazilian stocks. You find the same thing happening. So it's not just with that one company. When the Brazilian real bottoms against the dollar, you have their stocks bottom in the Bovespa. Here you have the spike up, and you also, it's kind of overlapping, so it's hard to see, but you see the bottoming in their stocks as well. Here you have the run up, and the dollar against the Brazilian real, which means the real finally bottoms against the dollar and starts back down, so it brings a bottoming in their stocks and brings them back up. So we are in that period, once again, and so there is great opportunity in emerging markets that's being brought about by their currencies. In the logical investor, and if you say, well, that's way over my head, I wouldn't be able to figure out, if a currency is about to turn around to be able to see if it's an opportunistic time to be in stocks, and then if I did, I wouldn't know which ones to pick and all that. What the great part about that is you don't have to figure all that out. I do all the homework for you. I essentially take the test for you and let you turn in the paper. In other words, I let you look over my shoulder as I do all the analysis and tell you exactly what to buy and why and when. So you don't have to figure any of that out. And anything that we buy is tradable upon U.S. exchanges. So you don't have to have foreign accounts in foreign countries and foreign currencies. Everything that you do can be in U.S. dollars and a U.S. dollar denominated account. And here, domiciled here in the U.S. So wherever you do your investing now to buy IBM or Google or whatever it is, whatever stock you like, that you can use that very same account to make the buys and sells that I'm talking about, even as it concerns foreign assets. And so we invest in stocks of all kinds as long as they're traded on U.S. stock exchanges through U.S. accounts. But this is one little trick of the trade that can help you quite a bit. And again, if you don't know what to invest in and how to do that, we literally have emerging market plays within our LI Logical Investor portfolio that you can follow us in and take advantage of these moves. The Mexican pesos had them. Many different currencies right now are in that point of crisis and having them, and it's creating great opportunity within their markets that over the coming years will pan out very well. You'll notice that let me separate this back out. That this does take time. You know, when the currencies peak and the home currency strengthens against the dollar, you know, there is a period of time that is happening there. So again, it's very realistic when I say we are in picks for 2 to 4 years. That is very realistic. Sometimes a little longer, sometimes a little shorter. That's an average. And if you're a true investor, you can't really be, you know, you can't say I'm an investor and you're in and out of stuff within days, weeks, or a month or two. That's not investing. That's, you know, speculating. And nothing necessarily wrong with speculating, but don't confuse that with investing. So investing truly is over time. Stocks do really need time to appreciate because stocks are companies, and companies need time to make and sell products and deliver services and expand their profits and expand their earnings over time to justify higher stock prices. And that's why true investing does take time. So it's not quite like what you see on TV. Real world investing truly is really a little bit different, much like you know, what you see play out on the movies is not usually how everything is in a marriage. In real life, there are conflicts and there are things to get through, and everything's not just always a fairy tale and love story. So it is with stocks. You see a lot of stuff on CNBC, Bloomberg, and different places where you have stuff like mad money, fast money, all this kind of stuff, and it sounds like quick money being made in and out. And that's not typically how most people make money in the stock market. Most people make money by truly investing and that over time. And you'll find that's easier on the heart, easier on the emotions to do that. You don't have to live in front of a computer. You can actually live your life. There's a lot of advantages to that. So anyway, I hope this has helped you. Thanks so much for watching. Again, you can reach me at SeanHyman.com, and God bless. Bye-bye.